If you're thinking about buying a home, chances are you've got questions, maybe even some serious doubts. Interest rates, home prices, the timing of the market, or even whether renting makes more sense in this economy. And with recent industry changes, you might be wondering if you really even need an agent. Today, we're breaking down the biggest buyer objections I hear every single day. We're going to peel back the layers to explain what's actually happening in the market right now, so you can stop listening to the noise and start thinking clearly about your future. Let's start with the elephant in the room. Interest rates are too high. This is the number one concern buyers have right now, and frankly, it makes sense. If you're comparing today's rates to the historic lows of 2 or 3% we saw a few years ago, today's numbers feel heavy. But here's the part many buyers don't realize. Those sub 3% rates were an anomaly, not the norm. More importantly, rates have already started a gradual descent from their recent peaks. Many economists expect further improvements as we move through the year. The danger of waiting for a perfect rate is that you aren't the only one waiting. When rates drop significantly, sidelined buyers flood the market, which often drives home prices up due to increased competition. The smarter approach is this. Buy when you can comfortably afford the monthly payment. You can always refinance your rate later if they drop, but you can never change the purchase price you paid for the home. Remember the industry saying, marry the house, date the rate. Objection number 2, home prices are too high and they're bound to crash. I hear this constantly. People are waiting for the bubble to burst. However, most experts and housing forecasts show prices stabilizing or continuing a modest upward crawl, not crashing. Why? It comes down to basic supply and demand. Even with higher rates, inventory remains historically low in many markets. When supply is low, home values hold steady. We aren't in 2008. Lending standards are much stricter today. If you wait for a 20% price drop that never comes, you're missing out on the appreciation that's happening in the meantime. The goal isn't buying at the lowest theoretical price, it's buying the right home at a price that fits your current life and your long-term budget. Stability is almost always better for a homeowner than a volatile crash. Thirdly, many buyers tell me, I'll just wait for a better time. Everyone wants to time the market perfectly, to catch that exact moment when prices are low and rates are bottoming out. But real estate is a slow-moving ship, not a day trade. If prices rise while you wait, or if rates drop and 10 other buyers start bidding on the same house you want, you've lost your leverage. During the off-seasons like winter or early spring, there are often fewer buyers shopping. This means less competition, fewer bidding wars, and much more negotiating power for you. Sometimes the best time is simply when no one else is looking. Objection number 4, renting is just cheaper right now. On a month-to-month basis, in some cities, a rent check might be lower than a mortgage payment. But let's look at the long-term math. If you pay $2,000 a month in rent, that's $24,000 a year. Over 10 years, that is nearly $250,000, $240,000 that is gone forever. You have a 0% return on that investment, but not the landlord. You just paid $240K off of his mortgage. Maybe find a shorter way, but the problem is the landlord gets the credit of equity, not you. When you own, a portion of every payment goes toward your principal. You are essentially moving money from one pocket to another in the form of home equity. That equity is a powerful financial tool. You can borrow against it for home improvements, use it to buy your next property, or let it serve as a massive nest egg for retirement. Renting builds your landlord's wealth, buying builds yours. Now let's talk about a newer concern. I don't want to sign a buyer agreement. Some buyers feel like this traps them into working with one person. In reality, this agreement is designed to protect you. It formalizes the relationship and ensures your agent has a fiduciary duty to you. That means they are legally obligated to put your interests above everyone else's, including their own. They handle the grueling negotiations, the complex inspections, the legal credits, and they shield you from the risks hidden in the fine print. Without an agreement, you're essentially unrepresented, trying to navigate the largest financial transaction of your life without a professional advocate in your corner. You wouldn't go to court without a lawyer. Don't go into a home purchase without a dedicated representative. Finally, we have the objections of confusion and fear. People say, I just don't understand what's happening, or I'm afraid of making a mistake. It's okay to feel that way. National headlines are designed to be scary and sensational, but real estate is local. What's happening in New York isn't what's happening in Florida or Nevada. A local expert can show you the specific inventory, pricing, and negotiation strategies for your neighborhood. Fear is normal when you're making a big move, but fear fades when you replace it with facts. When you have a plan and professional guidance, you aren't gambling, you're investing. A mistake is only made when you act on impulse. A success is made when you act on information. As we look at the market snapshot, conditions are actually improving for buyers. Rates are stabilizing, inventory is slowly creeping up, and sellers are more willing to negotiate than they have been in years. This is the year of the informed buyer. Every objection you have is really just a question that needs an answer. Once you understand the math and the market, that hesitation turns into confidence. If you're ready to stop waiting and start exploring what's possible for you this year, let's start with a simple conversation. Thanks for watching, and I'll see you in the next one.